Good afternoon, mortgage bankers. My name is Keith Kemp. I'm the president and CEO of Blackfin Group. Blackfin Group is a consultancy that specializes in the mortgage banking industry. We help credit unions, community banks, and independent mortgage bankers with all myriad of different topics that they need help with. Could range from strategy to operations, compliance to people management and change management, implementation of projects, or helping lenders get their Fannie Mae approval. But one of the things that we also feel a responsibility to do is share our perspective, particularly when it comes to wanting to ensure the long-term success and health of the mortgage banking industry. Like many others, earlier this week, I had the pleasure of once again attending the Mortgage Bankers Association's annual conference in Nashville, Tennessee. It's where a series of industry leaders come together to really talk about strategies, challenges, opportunities, threats to our industry, also some educational times for the industry to learn new strategies, concepts, products, so that we can better serve our local communities in the mortgage through our local branches in the mortgage industry. But leading up to the conference, I had the honor of being invited by Constellation Mortgage Solutions to speak on their progress on lending panel session facilitated really by a good friend and innovation champion, Tony Garitano. More specifically, really the panel session was to talk about how we take advantage of the opportunities that are in the industry and what are some of those challenges to taking advantage of the opportunities that still are present in the mortgage industry. Much of our conversation ended up around HELOC and reverse mortgages. I had some pretty passionate points that I wanted to share, and I was able to convey those points. And after the panel session, I was actually prompted by numerous friends, executives, and colleagues in the industry, asking me to really share my notes from the session and some of the data that I had shared, as they believed in their heart of hearts and agreed with my commentary that I think mortgage bankers need to wake up. We have a national crisis that we're on the threshold of, and if not already started. And mortgage bankers are going to have to decide if they want to be a part of the solution, because the alternative isn't an ideal solution. And I'll get into that here more in just a minute. But when it comes to reverse mortgage, I will tell you that clients generally think when they work with Blackfin that some of the biggest challenges related to reverse are process. It's around technology, it's around compliance, it might be getting approved or training. Honestly, folks, those are just check boxes on the project plan in order to get live. It's in my opinion that there are four major challenges in reverse mortgage, and they all dovetail into the same denominator, the same issue. And that comes down to people. So let me break down those four challenges for you. The first one is education. Consumer and originator and executives of banks, executives of credit unions, executives of mortgage bankers need to be better educated about the reverse mortgage. Everybody thinks it's the same product that it was 10 or 20 years ago, and quite honestly, that couldn't be the first. That's the furthest thing from the truth. The fact is that the product has changed. It's been clamped down on with a lot of compliance curbs that make it a very safe product. Yeah. And because of that lack of education and understanding of what the reverse mortgage does and what it doesn't do and what it doesn't allow for, is, for example, we had a client that we were consulting on their product diversification. They were trying to understand, we're in these products, we're not in these products. And we're not in these products because we don't know what the ROI is going to be. After several weeks of an engagement and analyzing their secondary risk as well as their clients and their marketplace, we presented them with the fact that actually one of the more profitable loans for them to consider, and that they will have good ROI on, particularly in today's shaky secondary market, was the reverse mortgage. We were told immediately that they would not consider the reverse mortgage based on reputational risk. Again, folks, education is one of the key leading factors of what we need to change about the reverse mortgage product. We really need people to understand that it's a safe, good product. Secondly, I'd say the second largest challenge when it comes to reverse mortgage is really understanding the math behind the challenge and behind the product, the demand, the opportunity, and then deciding whether we as mortgage bankers are going to be a part of the solution. In the USA today, there are approximately 73 million baby boomers between the ages of 58 and 76. They themselves are sitting on $10 trillion of equity. Now, 70% of those borrowers who want to be mortgage borrowers and were denied a forward mortgage but qualified for a reverse mortgage, only 1% were offered a reverse mortgage. Let me say that again because I want to make sure that it sinks in. Of the 70% of those who wanted to be a mortgage borrower, who did not qualify for a reverse forward mortgage but qualified for a reverse mortgage, only 1% was actually offered a reverse mortgage. Now, let's drill down just a little bit deeper. On one hand, we have the mortgage opportunity. The mortgage opportunity is 10x, as you can see, is based on the numbers that I just explained. But then there's the 100x need within our country. Let's go back to the number of baby boomers that we have in the U.S. There's 73 million baby boomers. 85% of the baby boomers, that's approximately 63 million, 63 million, will need some form of assisted living in the next 6 to 7 years. Not nursing home. They just need somebody else helping them with assisted living their daily lives and all the things that come with that. So at least 67, 65, you could even say 63 million who will be needing assisted living in the next 5, 7, 10 years.
Today in the U.S., there is only 1 million licensed assisted living beds.
As it stands, we are only doing 3, maybe 5,000 reverse mortgage loans per month. Folks, we can't build assisted living facilities fast enough to meet the need over the next 5, 6, 7 years. Most of us want to retire with dignity, want to retire and perhaps pass in our own home. That is the ideal solution, to be able to stay in your own home. But the only way you're going to be able to afford to do that, and I've experienced this with my mother recently having a stroke, the only way you're going to be able to do that today is in an assisted living facility. And quite frankly, of all the facilities that she had an option to live in, she got lucky. She was one of the lucky 120 people to be able to end up in an assisted living facility that takes amazing care of her. All the other facilities were not a great option. Their quality, their service, their care, their love is very questionable. So where are these people going to go? I truly believe, my perspective is that reverse mortgage is what is going to be needed in order for people to be able to age in place successfully. So the question is, does the mortgage banking industry want to be a part of the solution and make a little bit of margin? Not going to make 6, 10, 12 points on a loan like the old reverse mortgage. Going to make more in lines with what you're making on an FHA. But I argue and believe that it's possible that if we aren't part of the solution, then the government's perhaps going to step in and provide a solution where we as originators aren't going to make any money. Because they're meeting the national crisis that's in America. And they're going to perhaps pick 3 or 4 lenders that eventually get the kickbacks. Is it possible Finance of America is onto something right now? I believe the better answer is for community banks, credit unions, and independent mortgage bankers to better serve their local communities and needs by learning and adopting the reverse mortgage. With that said, the third challenge that I see in the marketplace. Now, because we were in Nashville earlier this week, I'm kind of thinking and hoping I can get away with this analogy still. It resonated with some folks in the room when I was on the panel, but we'll see if it carries over the same as well on the video recording here. I believe in mortgage, there's two styles of music. There's pop music and there's country music. Pop music being forward mortgages. Country music being reverse mortgage. Pop music, you can go fast and furious and have fun and bust a move on the dance floor. Nobody's going to care. Nobody's going to judge you. It's all good. We're all making money, fast and furious. We'll just keep closing loans, right? But when it comes to reverse mortgage, things slow down a little. The song takes a little bit 2 minutes longer to play. The song has a story, and you've really got to be engaged in the story to understand what's going on. You've really got to be disciplined on the dance floor to learn the two-step or the line dance. You've got to be in synchronicity with everybody on the floor, meaning you've got to be in synchronicity as an originator with the borrower, the borrower's family, the counselor, to get that certification, and all understanding is mutual. You've really got to be committed to country music in order to really be able to enjoy the music. So I think that there is a need for a paradigm shift in our origination, distribution channels, and markets. Originators need to understand, executives need to respect the fact that there's two lines of business. One is fast and furious fun, bust a move, but then there's this slower bank and pipeline of business that has to be respected, and it's going to take a little bit longer. Lastly, I'd say that the biggest challenge in the industry is that I believe, and no offense to any one individual, is just where we ended up as a result of irresponsible reverse mortgage lending some 10, 15, 20 years ago. But I believe that the last real major challenge in the industry is we have stagnant reverse industry leadership advocacy groups and associations. Now again, nobody's doing anything wrong. It's what the industry needed to do. It had to be a close, tight-knit group to protect the loan, to protect the borrowers. The borrowers weren't being taken advantage of. I totally respect that. I think that's great. But the reverse industry has become this exclusive niche group that nobody's allowed into. I kind of think of country music before Garth Brooks. Before Garth Brooks, you couldn't say you were a country music singer or even be recognized as one unless you had a truck, you had a dog, you were a drunk, or you were divorced. If you had all four, you'd be in the Country Music Hall of Fame. But honestly, they didn't allow any kind of crossover. I think that the mortgage industry needs to wake up and start to understand that there's a crossover opportunity, and there's a little bit different speeds to the music once you adopt the reverse mortgage. But I think that the reverse mortgage product, being that it's not really a hard product, primary differentiators are pricing and documents and the counselor. Everything else is manageable. So I have a lot of close friends and executives that are executives and originators in the reverse mortgage industry. I have all the respect for them in the world. I think that they're very good. And quite frankly, I think that they need to be elevated as senior leaders and executives in our mortgage companies and really be absorbed in order to help effectively teach how to cross over, teach people how to do the line dance, teach people how to do the two-step. I think that we need to leverage those assets in order to position the mortgage banking industry really to be able to solve for this national crisis that's at our fingertips. So to sum it all up, in my opinion, reverse mortgage needs a complete revival. It really needs to start over, and it needs to start now in order for us to really have an impact, start having an impact in about a year. I love Tom Selleck. I watched him as a kid, but I think it's time for him to retire. I think we need somebody like, I don't know, Julia Roberts, Chris Rock, Jerry Seinfeld. I don't know who the right person is or spokesperson is, but we need an overhaul. Change the name of reverse mortgage. I'm perfectly fine with that. Let's give it a whole new breath of fresh air. What I don't want to see is mortgage bankers miss the opportunity. We've long been the backbone of the U.S. economy. It's an industry I'm very proud of and have served for, well, I don't know, going on 20, 25, 30 years. I just don't want to miss the opportunity to be a part of the solution to this U.S. crisis. Hey, I really appreciate your time. This is just, again, another Blackfin Group perspective to help protect the overall health and success of the mortgage banking industry. From all our friends, your friends here at Blackfin Group, we thank you for your time. Have a great day.